Who remembers the time before the illness? You know, all-time highs from Tesla. But why? Can we learn anything from that time to help us invest now in this crazy market? Let's take a look back and find answers so we can invest better today. And we're gonna get started right now. Welcome back everyone, and in this video we're going to cover what was going on with Tesla before the illness, why Tesla stock was doing so well, and how looking back can help with your investing right now. And if you're interested in building real wealth alongside a real person, not just some dude with a rented girlfriend, I don't even have a girlfriend, go ahead and subscribe, hit that little notifications bell, and while you're down there, go ahead and give the video a like as well. So what was going on with Tesla before the illness? Well, let's go back to a magical time in history. The date was February 19th, 2020 BC, before the illness. And Tesla was off another fresh high of $917 per share. Frothy drinks were flowing regularly in the houses and bars across the world. You could make YouTube videos while drinking frothy drinks. Tesla was marching towards $1,500, which was just a quick stop on the way to $15,000. Everyone was subscribing and liking my videos. Don't forget to do that. Elon was dancing and smoking. All was right with the world.
And then the illness happened.
And frothy drinks were no longer flowing. You could no longer even go to a bar. Tesla fell to under $400 per share. The world is in some form of lockdown. On the bright side, I don't think Elon stopped dancing at home. He really should post his home life on Instagram or start a vlog or something. I bet he's fascinating at the house. Why was Tesla's stock price doing so well? Tesla started the year at $430 per share. Then it promptly doubled in price in a little over a month before hitting $917 at the closing on February 19th. So what was causing such insane growth in such a short amount of time? There was positive news left and right. Seemed like every day there was an article, an analyst upgrade, or an Elon tweet to fuel the frenzy. Promise of long-term sustained real profitability as they made money again in the fourth quarter of 2019. Rapid expansion with the stand-up of the Shanghai factory, rumors of a gigafactory in Texas, and to satisfy my inner nerd,
super cheap money was chasing yield because there was no yield to be chased anywhere else. Leveraged hedge funds with debt levels no one has ever seen before were chasing the stock. Trillions of dollars in debt instruments out there, more than the GDP of most countries.
Okay, nerd ran over. And let's not forget the ridiculous hype. ARK Invest is by far the biggest Tesla bull out there. And I agree with the premise of their data and the research they did. Unfortunately, it seemed like no one really dove into the data or used a logical approach after reading the report. And as a bull investor of Tesla, ARK is going to paint the picture sunny side up, and they didn't do anything to really squelch the excitement. You know, they used juicy words like might go as high as, or probability of, whatever percent to hit this astronomical price. And they threw up lots of different data points and intermingled it all to create different bull scenarios. And rather quickly, people started viewing everything Tesla related with rose-colored shades. Not like these shades. I don't wear rose-colored shades. Essentially, the best case scenario was now the most likely outcome in most people's eyes. That just became the narrative. But in the euphoria of the run-up, reason and logic gave way to the market bulls, which is both exciting and dangerous. In the end, it made the stock frothy. If you want insight into when Tesla is getting frothy again and what to do about it, make sure you have subscribed if you haven't already so you can get that analysis. And if you've already subscribed, then please just like the video so YouTube will promote and get future videos out to you guys. So how does looking back help out now? There are 3 things that can help us now by looking back to this magical time. The first, it's a reminder that this is still a growth stock. As such, it's unreasonable to try to compare it to other behemoths like Apple when it is not as mature as that company. So it should be expected that Tesla is going to get harder in this downturn, more so than an Apple or a similar company like that. There are lots of people out there drawing comparisons to performance in certain scenarios to how Apple can perform, and that can just create some bad assumptions. Speaking of bad assumptions, no matter how much we love Tesla, it's not large enough to overpower the entire market. Tesla is awesome, but they are a small fish in a giant pond, at least for now. You don't believe me? There are a few companies out there with enough cash, and I mean they could write a check tomorrow to buy up all of Tesla's shares. As awesome as Tesla is, it's just not there yet. But never fear, I do think they will get there. But let's not jump the gun just yet. But hey, it's not all negative. The huge positive of being a growth stock relative to those behemoths is that Tesla has far more upside when we come out of this. I'm probably not going to 10x my money with Apple. That's just reality. But it is possible with Tesla. But let me be clear, we must be out of this illness thing first before we see sustained growth from Tesla. Second thing is counting the growth of their other businesses as future revenue and are guaranteed to succeed like the cars is just silly. I hear it all the time. They aren't just a car company, they're so much more. And I agree, but cars make up most of their revenue for now. Their other businesses get a lot of hype, and rightfully so. But we are investors and we shouldn't care about hype. We should care about revenue. And right now, the vast majority of their revenue does not come from solar or their other businesses. Additionally, Tesla is not going to bat 1,000, no matter how much we love them. Some of their ventures are going to fail. That's just the truth. But that is part of what makes this company so exciting. Their willingness to take chances on things that are way outside of convention. Not only do they take chances, they try to disrupt and turn entire industries on their heads. And when they hit, it's going to be massive, but they will have misses that will be bad as well. Until these businesses mature, it's not wise to count them into your stock price calculation. If you are counting them all as being wild successes, then you are speculating. You're not investing. And the third point, it gives you a preview of the euphoria that this stock has the potential to bring if they continue to successfully roll out products to market. As I mentioned in a previous video, I'll put a card at the end for you. We have seen the future with this stock and we're getting a massive do-over with this market downturn. This is the awesome part about a growth stock. People get unreasonable at times about it, and the hype train is strong with this one. More importantly, the financials are finally starting to support the hype. All it took was just a couple of quarters of not losing money and the stock exploded. Even if I think it's ludicrous, I stand to benefit from it, and so do all of you if you are invested in Tesla stock. So if you are subscribed to my channel, which you can do right there, you can follow us as we prepare to ride the rocket ship again. And as promised, here's the link to the video where I lay out why this is such a massive opportunity right now. I'll put it in the description for the people who are on their phones. And if you really like the content, please go ahead and give the video a like as well. Thanks.